Ladies and gentlemen, welcome back to your favorite show, the Breaking Bitcoin Market Update. Hopefully you guys are doing absolutely fantastic today. We've got a great show for you guys today. It is September 13th, 2022, Foul Year of our Lord. My name is Justin Wise, lead analyst and senior mentor at crackingcryptocurrency.com. And just a warm welcome to everybody. Thank you for joining for today's stream. Obviously, we have got some incredible numbers coming in today. We have got a quite big movement from BTC rejecting yet once again as it tries to climb its way back above, and as everybody is just kind of getting comfortable in the little mini rally, as altcoins are popping off, as Bitcoin's looking good, everybody's getting really comfortable, considering increasing their position sizes, maybe sliding the leverage slider over to the right, when this morning the CPI numbers come in and we show 1% increase in inflation month over month. And the entire market pukes almost immediately. NASDAQ down 2%, SPY down 2%, Bitcoin down almost 6%, other altcoins down significantly more. Although I will say, I do feel that the crypto market has held up relatively well in spite of all the bloodshed. We do have some kind of intermittent spots of tokens bouncing back. DFI just pumped 3% in a 5-minute bar just now. So there's actually lots of good activity, lots of good trading, lots of open interest, and still some good opportunities and trade setups out there, which we'll go over today. So in today's episode, we're going to go over where we feel this recent price movement is going to take Bitcoin. We're going to go over our long-term projections. We're going to go over our short-term projections. We're also going to look at our altcoins of interest, looking at the altcoins that are popping off today and that you should be putting your eye on for trade opportunities. And then we're going to finish off with open it up for an AMA and then taking your guys' chart requests. So crank your leverage sliders all the way to the right, sit yourself in, and make sure you guys got a nice Coca-Cola or a Mountain Dew, and we're off to the races. Before we begin, as always, we are very proud to host the fastest growing online community of cryptocurrency investors and traders. To stay up to date long after the show is over, make sure to join us in our free Discord at discord.crackingcryptocurrency.com. Link, as always, is down in the description. And if you'd like to support the show and you enjoy the content that we make sure to subscribe so you never miss an episode. And don't hesitate to smash that thumbs up button. Really helps boost us up in the algos. Lets other people find us and continues to incentivize us to making content for you guys. With that being said, let's go. All right. So again, just overall, what happened today? CPI coming in at 8.1. That was the high range of analyst expectations. Ideally for bullish continuation, we were desiring a CPI print of 7.9. Anything from 7.9 to 8 would have been okay, but we came in at 8.1, showcasing 1% month over month increase. And so overall, I've obviously talked a lot about just the current situation. I just kind of want it to be said that on a deeper level, right? As we kind of zoom out and away from, identifying trade opportunities to make money and being successful financially and all of these things that individuals desire and utilize their time and energy to accomplish. It's really hard out there for a lot of individuals. When I began trading shortly after the 2008 financial crisis, 2007 financial crisis, really. And, the reason why I initially got into trading, and I go over this in the Pathways to Profit course in the introduction section, is because I saw a lot of people that I really respected and loved and kind of looked up to, because I was very young at that point in time. And just kind of looking into, who am I going to be as a young man? Which career am I going to pursue? How am I going to express myself? How am I going to find, sustainability or peace or joy or love? All of those things that were kind of running through my head as a young adult. And I was just taken with how difficult life was and how much the financial stress was on individuals as the ravages of inflation kind of spread out. Because you have to understand, after the financial crisis, and you can see this if you go back to the tech bubble as well. And crypto is really no different. Startup culture got hit first and got hit the hardest, because that is, anything that's high risk on is going to get hit the hardest and worst whenever there's financial trouble. All right. So remember that if you're ever in a market crash and you're wondering statistically what assets should you let go of, it's the highest risk ones. Those are the ones that are going to get hammered the most. And in order of operations, those typically are startup, then crypto, then tech, and then it goes on and on and on until you get down to commodities, which are typically considered to be relatively safe. So I just want people to be cognizant of that. I don't really have a large point here, but I don't want it to go unsaid that in spite of us doing all of this and being successful in making money, which we are being quite successful in making quite a lot of money in the cryptocurrency markets, just take some time and realize if you're doing well, how difficult it is for other individuals out there. I guess that's all I got. That's really, I'd really like to put a better feathery cap on that, but it's just something that I don't want to be left unsaid. Moving right along. All right. What do we got? Bitcoin printing. Actually, we're down almost twice that. We're down almost 10% on the daily. It was 6% this morning as I did my market analysis. Again, just rejecting from a higher high. We can see here that Bitcoin's struggling to put in a higher high, which it does. It does make a higher high than we experienced back over here. And then collapsing back down. So obviously, as you guys are familiar with, if you guys have been following the show, or if you're part of the premium trading group, or if you're just in the free Discord where we occasionally leak information from the premium, I've never known that to happen. What are you talking about? As you guys can see, we staggered into our limit long entry. All right, we began accumulating at the point of control and then staggered into that position. I think our final fill was at 19.3, so our final fill was right about here. So our average entry is actually a little bit lower than that. Our average entry is probably right about where the point of control is right now. I can actually go take a look. Yep, that's about right on point. So overall for the long-term swing position, not too much here. It's very easy to kind of hop on and say, okay, well, we had this massive bearish engulfing candle, but the reality is this was really, catalyst driven and news driven, and it's yet to see if we're going to get that sustained follow through or if we're going to have a little bit of a buyback. All right. And realistically, I think the numbers are in either order. So one thing I will point out here, and this is just a little bit additional alpha. So I've been trading USDC margined option contracts on Bybit. And those have been relatively good, mostly just doing weeklies and using that to hedge or utilizing that because I've got capital tied up in my multi-bots in the USDT perpetual contracts. So Ledger X, or now FTX US derivatives, has incredibly cheap options. All right. There is such a mispricing in options between Deribit and Ledger X options. So if you're a United States citizen and you want to trade cryptocurrency options, and specifically, I want to point this out because Ledger X right now has the best dollar value if you want to buy put protection. So if you want to go out to December, and this is so important because this is something we've been kicking around the office a lot. I keep saying to you guys, back in 2018, right? We watched what happened. This is here we go. So we watched this happen, right? Price went completely flat and sideways for a long period of time, very little volatility. Then we entered this just horrible death zone area for Bitcoin. This was just one of the most difficult and stingy places to trade. There was no price movements, it was just rough. And then Bitcoin absolutely collapsed down to our 200 weekly simple moving average. And also at that point in time, Bitcoin's realized price metric that we get from Glassnode. So it is very hard for me to kind of get that fractal or get that pattern out of my head. So as I navigate these markets and as I continue to think, well, what's going to come next and how can I position myself for what's going to happen next? Where's the next best trade? Where's the best place that I can put capital? I continue to go back to that, thinking about November 2018 and understanding that history doesn't repeat, but it rhymes. So it is just impossible for me to get out of my head the requirement. And obviously, I've done a lot of analysis on this. The reality is that we have yet to see any significant on-chain demand metrics pick up. Now, we do start to see the beginnings of what might be hopeful. If we go over here to my dashboard, Bear Market Mirage in Glassnode, we can see that some of these metrics are beginning to maybe hopefully begin ticking up a little bit. So for example, we can look at new addresses momentum. So this is tracking if we're experiencing new network demand and activity. If there are new addresses, if the new addresses are overtaking the average of addresses. So this is the 30-day moving average of new addresses versus the 365-day moving average. And so what we want to see is this red line tracking above the blue line. And we do see, hopefully, if we zoom in to the last 3 months or so, we do see this. Well, that's a little too granular. Let's go year to date. We do, that's still too granular. Let's go 2 years. We do see this metric begin to trend up basically since July. This metric basically bottomed out in July and is beginning to trend up, but it's just not showing that consistent growth that we would really want to see. Altcoins really now making a move now, everything up about 1% off of their lows over the last 5 minutes, as we are experiencing a little bit of seller exhaustion and a brief period of buyback for the intraday traders out there. So yeah, this metric has not recovered. Our realized profit and loss, our exchange inflows and outflows, our average coin dormancy, all of these things, coin years destroyed, our accumulation trend score, ASOPR, all of these things are still indicative of a bear market. They are not showing that significant market recovery, which is what we would want to see to really begin changing our tune on BTC. So while we see that investors are essentially taking any and all opportunities to grab exit liquidity that they can, and when we get massive movements off of this, like by news-driven catalysts, which granted moved the rest of all other markets as well, but still, the reality or the possibility of Bitcoin losing this shelf of support and plunging down to lower numbers is a non-trivial possibility, and one that individuals need to be prepared for. I would much rather pay a premium on put protection and be able to hold my spot holdings rather than go through the rigmarole, not the rigmarole, that's a custom word here, rather than just be absolutely wrecked by holding spot. Because listen, obviously, some individuals are holding spot. I'm holding spot, as I've been very upfront about. 25% allocation to the total holdings that I want in BTC at this current price level moved out of my stablecoins, and I think that's a good way to do it. That's obviously what I've done as well. So when we look at downside price potentials, we're not actually going to use TradingView. We are going to just use Glassnode. So for our downside targets, we're going to consider two valuation models that are down below us. Obviously, where Bitcoin is currently at is very, very close to Bitcoin's realized price, which I find a very fair valuation metric. As we can see, realized price did actually catch the bottom of the March 2020 sell-off, the March meltdown. We did go down a little bit lower than that, but overall, right there. And that corresponds very nicely with the 200 weekly simple moving average, which is a very key important moving average. It's often acted as support and resistance, and it was one of the most important metrics that I was looking at for downside Bitcoin price targets throughout the year as we were coming off of the highs from last November. However, we've reached that 200 weekly simple moving average, and we've yet to see that kind of on-chain demand and recovery. And as I've said, it is plausible that Bitcoin is just moving forward in a long-term accumulation range, that the bottom or the near bottom is in, and that in the long term, it's pretty much up only from here. But with all of the macroeconomic situations looming over our heads that Bitcoin has never experienced, rising inflation, the Chinese credit bubble that's about to spread out, the energy crisis in Europe, obviously the geopolitical conflict over in Ukraine, all of these things are not highlighting a very positive short-term future. All right. And as we creep closer to the winter months, where Bitcoin is pretty renowned for either putting in a top, depending on what year it is, or plummeting to new lows, we have to eye that second possibility very seriously. So how can you guys protect yourself? Well, there's a couple different ways. One, you can do what I did, and you can just go simply buy cheap puts on LedgerX, consider the premium, a tax that you're going to pay anyways, and if your trade ends up being successful and you're actually able to cover at a significant profit or just at break even and cover the losses on your spot holdings, great. You've accomplished what you needed to accomplish. So there's no referral code. You guys should check out LedgerX. If you guys aren't familiar with options, then don't do that. You can also just do the very classic buy spot and short futures. Probably the best place to do that is with the expiration contracts on Bybit. That's what I would recommend. The only problem with that is that I commonly look for what are typically called risk-free trades. So a very risk-free trade, we'll go over and look at Glassnode, and this is something that I monitor all the time, is the rolling basis. So right here, this is Bitcoin futures annualized rolling basis for the next 3 months. And this tracks basically the contango of futures markets, right? So when futures markets are in contango, it means that traders are essentially pricing in that they're expecting higher prices. So what you can do is if the spot price is lower, you can buy spot and you can short sell on futures exchanges. And whatever that difference is known as the basis difference, and you can collect that in value. So what does that mean? So if we look over here at August 2016, actually, yeah, let's look at August 14th. August 2016, August 14th, 2022. We can actually see that the annualized rolling basis was 2.386%. That means on average, you could buy spot short futures and collect 2.386% profit, right? The overall beta of the trades would cancel out and you would receive 2.386% in alpha, which if you only have $10,000 is not what you want to do with your crypto holdings. Probably better to go try and get whitelisted for an NFT drop. On the other hand, if you have $1 million, then if you're looking at a 2.386% risk-free trade, well, hey, sign me up, okay? Nice place to park your money, sits on exchange, all is well and good. Now, as we can see, that metric has been absolutely crushed to like less than 1%. And generally, if the basis is less than 1%, there are going to be better and other opportunities out there. Interesting to note that this metric is climbing up, right? Generally a sign that traders are expecting higher prices in the future. So interesting to see that actually start to curl and trend up higher. For funsies, let's go look at our options metrics right here. So this is our open interest to put call ratio. This is the put call ratio of all open contracts. And as we can see, just one second. All right, so this is kind of interesting to see. So over the last, actually since the 9th, really, since the 8th and the 9th, the open interest has definitely moved to the downside as more puts have been put on. Excuse me, I am wrong about that. That didn't feel right when I said it in my head. As more calls have been put on. So as this number and metric rises, more puts are being put on, or there are more puts opened up, open in general, because open interest is tracking positions that are currently open, whereas volume is tracking what's being put on over the last 24 hours. So volume allows us to see where traders are moving currently, and open interest allows us to see where position traders are adjusting or modifying their positions. So, metric going up, more puts being put on, more bearish bets. Metric going down, more calls being opened up, or more puts being closed out. Either way. So very interesting that traders were definitely on the wrong side of the market for this movement as they were taking on additional bullish risk, and overall likely got wrecked today. It'd be very interesting to see. This metric lags 1 day behind, so it'll be interesting to see what this looks like tomorrow. And as we can see, implied volatility, after actually coming down a little bit on the weeklies at least, has now skyrocketed up to 80%. So yeah, and same thing for actual volume as well. We can see that over the last 24 hours, more calls have been put on than puts. Again, this is a day behind, so this is what was going on the day before yesterday. So very interesting. Okay. Back over here. All right, so the last significant thing that we noticed was this regular bullish divergence. All right, we identified this, played this, traded this, bought this, sold this, did well. And now price is just basically pulled right back to our entry. So I am not, I do not have a strong directional bias on this. I need more time. I need more data. There's no action that I really want to take off this. And the best data is just watching how the altcoin markets respond. And essentially after selling off, we're continuing to see what was strong be strong and what was weak be weak. So again, I think that long-term put protection is smart here, or taking advantage of opportunities to build up. Actually, no, I don't want to say that. That I would not recommend that, especially for amateur traders or individuals who are not professionals. I would not be building up short positions in this area. It's not the best way. So this might sound counterintuitive, but building up shorts in a redistribution / potential accumulation region, expecting the plunge or expecting price to decline, is generally not the best way, in my experience, that you could profit off of the loss. I think the better thing to do, particularly with futures and crypto, because I do not know of many individuals who have successfully shorted what looked like a bottom and held that position open to significantly profit from it. You know, generally short selling profits come in windfalls, right? You are able to catch an opportunity and price moves in your favor significantly, and then you have the temerity to continue to hold your position open as it moves in your favor. That's difficult. That concept is known as letting your winners run, and that can often be tricky. All right. So we're rambling a little bit today. So let's get right along. So let's go on to the trade of the day breakdown. This is where I like to highlight one of my better performing trades over the last few days. So in today's trade of the day breakdown, there we go. Oh, come on now. I guess we'll work with it. All right, in today's trade of the day breakdown, we are going to be talking about REEF. That's right, REEF. Why? So REEF has had an absolute explosion in open interest increase over the last 24 hours. And it was like this 2 days ago, or excuse me, yesterday. Yesterday it experienced 1,000% increase in open interest. And then today it's experienced another 947% increase in open interest. So massive explosion in open interest. Funding is negative 1.97. Crazy. That is absolutely insane. Yet the long short ratio is 0.772. The reason why that funding rate is so insane, absolutely insane, is not because of the, like, I'm trying to point this out. How do I point this out? It's this long short ratio. Generally, you will see an extreme in funding when there is an extreme in position traders in a certain direction. So when price has been falling a lot, and then you have a lot of latecomers come and try to short sell the bottom, funding will often spike downwards quite high. And that is generally a good sign of the bottom, because everyone is trying to pile in and cram into the trade continuing, yet being ignorant of the fact that price is actually at support, and what those individuals would typically fall into is a trap, a bear trap, and they will just get completely caught. They will get liquidated, and their exit, or excuse me, their entry liquidity fills the limit orders of individuals wanting to take the market to the upside. So that is typically how this works. In this case, this funding is so outsized because of the speculation on the derivatives exchanges pushing price away from its spot equivalent. So arbitrage opportunity there if you guys are able to kind of muscle into that. So anyways, as I said, yesterday I noticed that this open interest was quite high. It was a complete outlier in open interest. So I knew that the opportunity was there. All right, so here's the daily time frame. As we can see, just REEF has had an absolute explosion, 37.92% yesterday and currently 9.13% today. We now finally have a 200 daily simple moving average, and as we can see, this is an area that we've run into some resistance. And I want to contrast this price movement, right? Obviously, we can see this initial sell-off, right? Long period of accumulation with some volatility, and then explosion to the upside. And this is typically what we want to look for a PTP trade. You actually could have taken this. Obviously, yesterday we had all signals green for a PTP primary long. However, of course, we're overextended, and you always want to be very, very careful about this. Cryptonomics asks, am I using Bybit? Yeah, of course I am. That's my primary exchange. I'm just not trading their options. Their options are fine and well priced, but LedgerX just has better priced options. I mean, just ridiculously so. So I will say that I do prefer Bybit's interface for options. Hold on a second. I do like Bybit's interface for options better, but You can't argue with cheap puts, man. Yeah, so obviously we had all the stars align here for a primary long, but we were overextended, and you always want to be very, very careful about that. And I want to juxtapose that price action and what happened with what we saw with Luna 2. Same thing, right? Long period of sideways accumulation, explosion in price, and notice this, right? Price moves up 1 candle, 2 candles, and then rejects. All right, so will we see the same thing here, right? Sideways accumulation, big pump, secondary pump. Do we see the sell-off after this? We do have a very long-legged doji right here, typically a sign of market indecision as buyers and sellers struggle to gain control. Luckily, we have a few more advanced tools, so let's drill in. First off, let's go down to the 30-minute time frame, and I will show you guys the 2 positions that I took on REEF. So I did enter. All right, so 2 positions on REEF. Obviously, we had that massive explosion in open interest yesterday, and I did end up entering my position here. Let's actually go and show you guys. Where is... Here it is. All right, yeah, REEF USDT. All right. Entry on September 12th. My average entry was not 528, and I was targeting 554 for, yeah. So, all right, let me refresh my memory there. 528. On the 12th. Here we go. So basically right where that red line is, the point of control, I entered here, okay? And then overnight, price dipped, did not hit my stop loss. On this pump to the upside, we actually hit my first TP at 554. And then because I was using 3 smart trade feature, anytime my first TP is hit, my stop loss automatically moves to break even. So as I got to my computer this morning to review my trades, I saw that, I had been in drawdown all night. And then during this pump, I was able to hit my first TP and then stop that at break even. So it was basically right around there. It was shortly after this. This had already happened when I got to my computer. So then I start looking for any further opportunities. Well, obviously I had already determined that there was a continued uptick in open interest. So there's still a lot of opportunity here. Then I came over to Coinalyze. And I used this feature right here. So this is the 5-minute chart. So this is roughly where I entered right here during this morning's session. And this is the pullback that hit me out, broke me out of my break-even stop loss. Here, this is interesting because what can we see here? We can see that even after the market decline, this is after this is the sell-off of Bitcoin. So this is the CPI print right here, this down movement right here. But look what's happening to cumulative volume delta, and look what's happening to open interest. All right. These are showing you that buyers are still in control even during the downtrend. They just bought more. Look at this rapid increase in open interest. Yeah, there is a drop. There is a drop here in open interest as price initially sells off, and that's okay. That is people who bought the top getting stopped out. You can see that corresponds with some long liquidations as well. But you can see that CVD showcases very clearly here that they were continuing to buy throughout this. So I position, and a few moments later, like 30 minutes later, we get this huge big pop, right? In my first TP, and then I manually closed my position out. Actually, I think I closed out right about here. And what do we see now? We see price beginning to take off again. Now, this is a little bit more interesting. So open interest declined. A lot of positions closed out here. All right. And now price is beginning to surge back up. Cumulative volume delta is picking back up. So what does this tell us? This tells us that these are new positions. These are new traders. So people started going long here. They did not buy the dip. This was overall distribution. All right. This was overall distribution. Traders were not buying this dip like they were buying this dip. As you can see, CVD continuing to rise even during this dip. So this is certainly less bullish excuse me, this down movement is certainly less bullish, and this is a pretty significant sell-off. However, CVD is rising, but what I do not like about this is that open interest is dropping. When there is divergence like this, when price is rising and open interest is dropping, it is a sign of weakness. You typically do not want to enter into those markets, and for that reason, I would not be going long on this movement. This looks like a little bit of a fake out to me. Yeah, just that simple. So mark this moment, timestamp it. We'll come back and see if I was right or wrong. But yeah, that's the trade of the day. That was actually 2 trades of the day. So, okay. Back to the big chart. All right. So overall, on the regular chart of Bitcoin here, nothing too significant to talk about. Just a bearish engulfing candle, generally considered a bearish reversal candle right here. And again, a large movement, almost 10% back down to the current point of control, and essentially our entry point. We've got a lot of luxury and we've got a lot of wiggle room here, right? We're at entry. We don't really have to take any decisions right now. We're making any decisions. The nominal volume was quite high. But why I don't want to be reactionary about this movement is because this is catalyst driven. This is sentiment driven. This is coming off of the CPI. And so once that news has kind of been flushed out by tomorrow, obviously it bodes of things to come in the future, but we'll see how trader sentiment is moving forward. Now, looking at price through the lens of PTP, again, essentially the same thing. We have this nice kind of little bullish breakout, and just as Bitcoin peeks its head above the daily baseline, potentially getting us excited and saying, hey, okay, we might be trending to the upside. Again, that CPI rejection comes in. Minx is now crossed back underneath the signal line. Water explosion, while not being below the explosion level, has ceased growing the explosion level, and Minx is beginning to taper down just a little bit. So just all obvious things you would expect to see from momentum oscillators or from indicators with only 1 day of difference. All right, so not as granular as we would like to see. If we do take this down to the 4-hour time frame, again, here we have this kind of large movement. The 4-hour did signal for a potential short here. Again, we were a little oversold, but just understand that that's because of the size of this movement coming off of this. So I could see a 4-hour potential swing short position coming out of this. And then again, if we just lose this shelf of support, this is kind of what you're targeting for. If we lose that shelf of support at about 19,000, if we lose 19,000 again, we do need to start seriously considering momentum shorting and picking up that position, which has been my position for forever, literally, as we've been in this area. As I said, if we lose the shelf of support, our first downside target is going to be 17,000. That's Bitcoin's balanced price. That also correlates with the difficulty regression model that we overlaid from Glassnode here. So here is our difficulty regression model, which attempts to calculate the all-in dollar for dollar cost of mining and producing 1 Bitcoin. And as we can see, miners are going to be struggling to be profitable if price does continue down lower from here. And that also correlates perfectly with Bitcoin's balanced price, which is another on-chain valuation. Cryptonomics asks, how do I get that open interest chart on Bybit to show? I've never seen that on desktop. If you go to Coinalyze, and the first thing you want to do is you want to make an account. It's free. Then all you need to do is go into futures data and coins, or you can also select technical analysis and just pick one of these. And then you just go up to the search bar. You can't actually see it. Let's see here. Yeah, just go to the search bar right here and type the asset that you want in. So we want to look at REEF, and you want to make sure you go REEF and then BY, or you can actually spell out Bybit. But if you just select the perp Bybit, so make sure you select the actual ticker on the exchange that you're trading and not spot the perp. And then you'll be able to access all these indicators. In addition to that, you'll also be able to save your layout so that you don't have to do it for each individual coin, because I find myself doing this a lot. I don't necessarily know, and feel free to correct me. I don't know if I see a falling wedge. Yeah. Okay. Now, what's now? So speaking of cumulative volume delta and open interest, what do we see here? All right, let's refresh. I was asking for too much. Open interest has continued to decline during the sell-off, which is not a great thing. Falling open interest in falling price is bearish. And as we can see here, cumulative volume delta has really had no significant upticks. We are, of course, off the lows here as prices kind of moved up just a little bit, but we are still trending to the downside. What's more worrying about this too, for Bitcoin's price, is that funding is also very positive, which means traders are taking on a lot of leverage for their long positions, and they haven't really gotten flushed out yet. As you can see, there hasn't been, I mean, there has, but we've had washes of liquidations here, here, and here. But at no point during this area did the bull sentiment kind of shift. People are still very bullish, but the exchange data doesn't support that. Cumulative volume delta continues to drop. Open interest continues to drop. And the thing is, with funding being very positive and being very high like this, it is very likely that what's going to happen is that price is going to continue to move down until all of these traders all these long traders get flushed out. That is typically what we experience. So that's a big falling wedge. I'm expecting 8K prices. I don't think so. But hey, we've been wrong before. We have been wrong before. So I appreciate that. All right. Now, how, listen, so, and this is kind of funny, obviously, because with 2 days, all right, I don't want that to go on unnoticed. With 2 days until the merge, how was Ethereum responding? All right. Not as great, right? Like Ethereum, not as great. Did not have the sell-off that Bitcoin did, but still down almost 7% on the daily. And again, as we can see here, just kind of the very similar rejection. Ethereum actually started curling prior to Bitcoin. So Ethereum actually started its indecision. Here we have a daily doji candle as we break above the daily baseline. And notice that our moving averages start going flat and curling over. Now, obviously, we were kind of in a macro situation of them doing that anyways. But yeah, harbinger there. Interestingly enough, Minx did reach that overbought level. And Wada Atar was showing its first descending bar as of yesterday. So early warning sign here on Ethereum. Now, there's no, as far as the daily time frame strategy goes, there's no current active short signal. We are not, although we are potentially trading below the baseline here. Minx is still above zero. We haven't shown positive delta with rising momentum, and Minx is still above zero here. So the trending longer, trending short strategy is not activating right here. Now, if we go down to the 30-minute and look at our day trading setup, again, yeah, beautiful short sell signal from time transformation here. A little bit of regular bullish divergence here coming in as we traded briefly below 2 standard deviations of the VWAP. Nominal volume very, very low here, though. Let's go look over at... I'm going to open up a new tab. I don't actually have Ethereum up. Oh. This is not the one that I want. I want ETHUSDT Bybit, but not spot. I want ETHUSDT per Bybit. So yeah, there was the tutorial on literally how I did that. And we'll go to the 30 minutes so we can get a better idea. Yeah, so look at this. This is fascinating. So as Ethereum was peaking here, and contrast this with Bitcoin, as Ethereum reached its peak, okay, This was 3 days ago. This was on the 10th. All right, so this was over the weekend. This was Sunday. Look what happens. Cumulative volume delta begins to decline, and price follows suit, and it just never stopped. Okay. You can also see that open interest goes completely stagnant, and open interest doesn't start increasing until we really have our first significant sell-off and CVD begins spiking low. Now, I will say that I always look for extremes because I often have success with extremes. Okay, I have success with extremes. Note how we now have this massive spike in funding, right? Which is indicative of lots of traders positioning to the short side. You always want to be hesitant about actively shorting these areas of the market. Yes, open interest is moving down. Yes, cumulative volume delta is moving down, indicating that that the sellers are in control, but you have to be very careful about when you enter. And when you see a big spike in funding like this, it indicates that a lot of people are trying to jump on the same boat that you're trying to jump on, which makes it a crowded trade. Also, note the difference here on Ethereum relative to Bitcoin, where we do have this kind of big slaughter of liquidations, long liquidations, and then price stops declining. So again, yeah. So again, we already successfully took a lot of very good altcoin positions over the last few days. We've actually been really crushing it in the premium trading group with our premium signals. So what's up, bro? So there's not a lot. Sorry. What I was going to say is that, again, there's really no need to take immediate action. This is, for Ethereum specifically, this is the wrong place to be entering a trade, particularly the short side. But I can understand that with the overall sentiment, maybe not potentially the best place to be looking for a long position either. So if you don't know what to do, this happens to me all the time. Whenever I really have to, I look at all the data and metrics, and if it just clicks, then I enter the position. If I really have to sit there and think about it for a while, then it's not the right trade. All right. If I have to sit here and do mental gymnastics to force myself into finding a correct reason why the position is good, it's not. It's not. Even if you go on to make money from that, you're not building the healthy habits that are going to build a successful trading career. Hey, Brett, good to see you, my brother. And that's the most important thing, is building those healthy trading habits that will sustain you for a career of trading for the long run. Okay. All right, so we've got about 15 minutes left in the show. We've gone over REEF. We've gone over Bitcoin. We've also looked at Ethereum. And now I'll be happy to open it up. Feel free to ask any questions that you like. I'll be happy to look at chart requests and do analysis for your viewing pleasure. And before we get into that, just a brief reminder, again, that if you guys are enjoying the content and you guys like me showing up every day, don't feel shy. Smash the subscribe button, dominate the like button, show it who the boss is. Helps boost us up in the algos and gives us, and you will have our eternal gratitude from the CC studio. All right, let's scroll through the chats. Shout outs to Silent, Mini 2 Swing Trade Pros, Alex81, SG, Crypto Bull, Tom Hardy, Wook Chewy. Good to see you, Wook Chewy. It's been a while, brother. Jordan Stotts, Cryptonomics, Private. And B-Flow. And RJ Jamal. What's going on, man? So we've got GRT and the Solana to ETH chart. So we will begin with GRT from Swing Trade Pros. Be looking at the GRT valued against USDT chart on Binance. Though, for our edification, also, by the way, I forgot to mention this, but make sure you guys go check out today's market analysis posted on the website. I do go over the top 5 altcoins of interest and potential trade setups and ideas, summarizing a lot of the things that I went over in today's episode, but also some more stuff that didn't make it in there, including LUNC and HBAR. You guys can find the link to this, of course, in the description down below. Boom. So where is the best place to trade the graph? Hit BTC. No. Percent of volume. Binance. GRT USDT. Shocking. There we go. Okay, so from the perspective of the daily time frame, again, looking very similar to most altcoins here. Of course, we had this sideways period of accumulation and then this mini bear market rally that was brought on by everything moving up simultaneously. Almost made it to the 100 exponential moving daily average. As we can see here, our EMAs start to go flat, which is a sign of trend reversal, especially if it's conjunction with sideways price action. And then they actually begin twisting up. We actually get two of our fast EMAs crossing over our medium EMA here, which is kind of the first signs you'd see for a trend reversal. But unfortunately, price reaches up, Minx gets overbought, and we have this sell-off. Again, brought on and spurred by the rest of the market sell-offs. From where we're at from a long-term perspective, again, it's always kind of tricky to be picking out winners at the absolute bottom because the dip can just keep on dipping and lows can certainly get lower. But yes, I know that a lot of people are obviously going to be eyeing prices here as we're down near historic market lows and picking up long-term bags. So from that perspective, I've certainly done that with a few coins as well. Bond was probably the most recent one that I did that on. So yes, from that perspective, we are looking relatively cheap. All right. So as far as Binance is concerned, I mean, we're really only about 30% off of the bottom. And if we measure the absolute top right here, I mean, we're down almost 95%. It doesn't really get better than that, right? You're in that nice sweet zone. Just remember that down 95% can go down another 95%. I always have to feel like, I have to mention that. It seems like people don't know that. I know you know that, Swing Trade Pros. You're a professional. Anywho's. Let's see here. Yeah, so we do currently have our low established over here at 0.895, and we are successfully holding a higher low at 0.968. So, obviously just simple support and resistance. I would like to see this. This level has been tested 3 times before we have this nice push up. And so this kind of remains to be seen. If we do break this level of support, I think that's going to be coinciding with the rest of the market moving down as well. And if we wanted a really juicy breakout target here, well, it's going to be this 100 exponential moving average. You can see that we've only really gone for it twice in this downtrend. So since we peaked back here in November with the rest of the market, we almost made it there, rejected, and didn't even really get close except for here where we have this brief pop above, this fake breakout, and then smacked right back down. So yeah, if we could get price above $13.99, or let's just call it 14 cents, then happy times for everybody. But okay, moving on from that. Daily time frame strategy, nothing is being signaled for here, although we are crossing back down below the baseline. Note that our momentum oscillators are still in positive territory. So from the daily time frame here, nothing really to catch. If we go down to the 4-hour time frame, again, we had this nice reversal. Actually, look at this bearish divergence that Minx was able to catch. Look at that. Look at that. That is beautiful. This is the 4-hour time frame. So higher high, lower high, in conjunction with being overbought. Perfect reversal signal opportunity. Minx just absolutely crushing it. We are now trading back down below the 4-hour baseline. Our moving averages have converged and have crossed back underneath. Again, we have our fast moving averages beginning to trade underneath our medium moving average. So I'm always kind of wary when we have big movements down like this to the baseline. I do like to see a bit of a pullback before I start looking for short entries. And again, potentially, if we review the daily time frame, if this all turns to be out fundamentally, if this all turns out to be essentially catalyst driven news and we continue pumping tomorrow, well, then you don't really want to be shorting the bottom here. So especially with Minx, 4-hour oversold, Paralox, 4-hour oversold. Keep in mind, of course, we did just have a big movement down after trending up to the upside. So that always throws the momentum oscillators off just a little bit. But overall, what I would be watching for here, what I'd like to see on GRT, just from a technical perspective, is I would probably like to see a price pull back up, retest these moving averages, and then maybe scale into my short position there. That really allows you a kind of a nice, the ability to use this shelf, this ledge as your stop loss or invalidation area if price does continue to pump. And it also doesn't mean you short the bottom. Okay, let's go over here and look at, here we go. So a little alpha for you guys. Hex and Dogecoin seem to be in active accumulation right now on chain. Do with that what you will. Yeah, so here I'm using sentiment to analyze on-chain data and look for large spikes and metrics that I found to be correlated with tops and bottoms. Specifically, we're looking for a large increase in daily active addresses, which we have right. Oh, I chopped onions earlier, and now I just touched my eyeball. Oh my God. Whew. Okay. It's not on fire. It's just mildly annoying. Like my oldest child. I love you if you're watching. Okay. Woo! All right. For some reason, that made our viewership spike like 15%. So I guess I'll do that more often. Oh my God, that's bad. All right. Somebody talk. Fill the air. Let's talk about motorcycles. What do you guys ride? Suzuki? Kawasaki? Oh. Yeah, well, I just don't have a sync handy here at my desk, brother, unfortunately. Okay, let's... Okay, yeah, sorry. Was that a little out of focus the whole time? Or am I out of focus now? Maybe it's because my eyes just touched with... Maybe it's because I just touched my eye with onion. Whoop. There we go. Just use me. You guys are... Nope. We just suffer in silence, guys. Okay, moving on. Daily active addresses on GRT. Yeah, so here we can see a big spike in daily active addresses correlating with accumulation as prices in its lows. And we don't really have a massive, huge spike, but certainly, like, look at GRT, like big spike in daily active addresses here and the price moves down. Let's look at the last week. Yeah, actually, we can see that crystal clear. Look, price pumps, massive spike in daily active addresses right here, and price plummets. This is kind of interesting, though. So... Well, you know, but I don't want to interpret this wrong. So typically when price is in a downtrend and we see these big spikes, these red bar spikes, these are on-chain volume, these are transaction volume. So this is very high quantity of coins being moved around on-chain, which is generally indicative of buying or selling. But if price is going to continue to trend down here on GRT, then we'll often see this as like sellers miss the opportunity to sell, and so they end up selling here. But here's the thing, that's a big pump in volume. That's a big spike in transaction volume, and price didn't really move down that much. So again, I kind of want to interpret that as accumulation. Yeah, I'm just so emotional that my hex that hex is being accumulated. It's like when you see your kid hit their first ball, you know, or run their first 440. Just get all emotional. Decred, Raven, and H-bar pumping a little bit right now, as is Adam. Okay. So now we'll move on to GRT. We've got Ethereum, FTT, A-Gold. Yeah, we'll just replace A-Gold, GRT. All right, so let's look at the perpetual contract on Bybit. This is actually pretty instructive. Let's look at the 30 minutes so we can see what's happened before us, and then we'll do Solana real quick. Yeah. So right here, this is how. So this is a pretty crystal clear example of how you guys can use these tools to improve your trading. All right. So check this out. So right here, we have price pumps. Price begins moving sideways. Always kind of a scary thing after a pump. Whenever you see a big movement like this, and then price moves sideways, it's often more scary than price moving directly down. The reason why is because if price pumps and then immediately sells off, usually there's a second pump, right? But if price pumps and then moves sideways and then starts going down, it indicates that whoever was positioned to take advantage of this pump really distributed a lot of coins, because a lot of secondary players came in and tried to buy up as these guys were distributing all over their faces, and then price begins a long pronounced downtrend. So that's why I say it's almost scary. But look at open interest increasing while cumulative volume delta decreases in this price area, right? Well, open interest increases, cumulative volume delta decreases. Bam. Okay. Big spike in long liquidations right here, obviously. And the only thing I don't like here is for the same reason that I was a little concerned about Bitcoin. We can see that open interest is continuing to drop as price is dropping. Not good. Cumulative volume delta is yet to kind of rebound and begin picking back up. So sellers are still in control as cumulative volume delta begins to trend down or continues to trend down. And funding is still positive. That's what I don't like. Funding is still positive. Yeah. So again, funding. Now, to credit, we did just have this big wave of long liquidations. So, and again, from a higher time frame perspective, GRT is looking cheap. But for actual entry, this does not look very attractive for a long entry. Now, granted, I did pick up like 3 positions today that didn't look quite like this, but again, just looking sideways. But what I want to see here, what I'd like to see is I'd like to see this hold, price begin moving up, and open interest begin climbing as well as cumulative volume delta. That would support the positive funding. But with open interest dropping and CVD not rising and funding still positive, likely price will continue to move down until these longs are flushed out. So pull back here, maybe looking for a 4-hour swing short, and then things might change and pick up on GRT. I know GRT is kind of a hot token. I've traded it a bunch before too, but this is not really what I want to see for looking at a long position. So again, maybe in a couple hours, it'll look completely different. The buyers will step in, but right now this is not looking supremely hopeful to me. The only thing that does look good is a lot of long liquidation. So again, potentially this level does hold a support, and this is the local bottom for right now. All right, last chart, Solana to Ethereum. This is a pretty interesting chart. Obviously, Solana to Ethereum has been trending down here since, I don't know, the beginning of time, October 2021. That was like 10 years ago in crypto land. But we recently just formed a new low, right? We took out this market low right here. And generally, when you take out market lows at lows, generally you get a bounce. So not bad. Yeah, so downtrend. It's actually, I want to pop on. No, that's not showing any divergence. CVD would, but yeah, so pronounced downtrend, a little bit of sideways accumulation. Do we see an increase in nominal volume? Not really on the downtrend, but just on the pump. So Solana outperforming Ethereum in the short term, but just for a day. You know, we pumped right up to the daily baseline, basically the 55 exponential moving average right now, and rejected. So 55 EMA often acts as significant resistance in a bearish downtrend. Now, it does kind of seem like the bearish downtrend has subsided, particularly with us taking out new lows. If Solana to Ethereum continues to rotate sideways here, then that might actually spell good things. You know, here's the thing. I'm very speculative of tracking. Again, I used to only trade BTC quoted pairs back in the great days of 2016, 2017, 2018. And then 2018, I really just decided to go whole hog into futures, and I've really been doing that for the last 4 years. And now I only trade USDT perps. So what I will say is that, our momentum oscillators are ticking up here, but that's nothing crazy. I think the more important thing, particularly for the macro, is just noticing that our moving averages are beginning to flatten out and our faster moving averages are beginning to curl up. Is this indicative of anything long-term? No, not necessarily. We really need more. Let's zoom down to the 4-hour time frame. 4-hour time frame, you might actually even be able to get into a pullback long here, right? We've had an initial pump. Prices pulled back down to the 4-hour baseline. There's really been no sideways distribution. Like there was just the pump and then the sell-off. So again, remember, as I said, when you have a pump and then it just sells right off, often you'll get a second pump. But it's when price pumps and then moves sideways where the distribution is happening. And that's where you want to be concerned and looking for a fallout. I kind of like this. I'm not going to lie. Solana had that nice big pump off the bottom. I'm sure nobody else didn't notice that. Push up. Pull back, about a 50% retracement right here, holding the 4-hour baseline. You've got a nice invalidation area. You got about 3% to the downside if this closes out. It's a little bit of a bullish bet against the rest of the market right now. So nice hedge if you guys are putting on a lot of short positions. Other than that, I can't really speculate too wildly about Solana F, man. Oh, you like trading Solana against Ethereum to grow your Ethereum stake? Yeah, see that again. That used to be my primary trading strategy back in 2016, 2017. I traded altcoins to stack sats. And then, well, that was what I did in 2016 throughout 2017. And then fall 2017 happened and I was like, oh, cool. All these stats are worth a lot of dollars. And then stack Ethereum for BTC. Nice. Why don't you just go get a job, man, and buy it? I'm sorry, dude. We'll be a productive member of society, man. We're making money off of changing numbers on a screen. Oh, God. I'm just kidding, man. You keep on trading, brother. I appreciate all the support. All right, guys. Listen, thank you so much. We're going to head to over here for the thing. All right. Thank you guys so much for joining me for yet another exciting episode of the Breaking Bitcoin Market Update. As always, if you guys have any questions, comments, concerns, sarcastic remarks, or death threats, please feel free to leave them in the comment section down below. I will do my best to review them on the next stream. And pursuant to that, reading off comments from yesterday's stream. Our first one comes from GB, actually not yesterday's, I apologize, but last Friday's stream because we weren't able to do a stream yesterday. Our first one comes from GBU Wally. He says, glad to see you keep on keeping on. Always love the show. Integrity, competence, and humor. Highly appreciated, my friend. Our second comment comes from Crypto Bull 21 saying, so much free alpha. Much thanks. Thank you, my friend. Blue Box Territory. Thanks for the Energy Web Token breakdown, Justin. No problem, man. It was my pleasure. Mr. Ether Robert Warner, just an emoji with a money tongue sticking out of it. And Bob the Builder asking, what have I done to deserve so many streams? Pinch me. I must be in streaming heaven. You're not dreaming. You're in beaming, my friend. Anyways, we will be back tomorrow with another exciting episode of the Breaking Bitcoin Market Update, going over all the latest, the trades, the updates, the positions, the Huskies, and much, much more. If you guys are interested in improving your trading skills, consider joining the premium trading group to get access to our signals and all of our education and indicators. All that information is in the description down below. Go sign up to Bybit, get your free $50, and don't forget to read today's market analysis on the website. We will be back tomorrow. Until then, trade safely, risk management, emotional discipline. Give the ones you love a hug. Cheers, guys. Trade safely.